Yes, it's time for Mad Markets. So, Paul, is the coast clear? Can we buy again?
Well,
Are we optimistic? But then again, you were always buying. You weren't really worried anyway.
We bought last week Friday when everything was collapsing. Over the weekend, they had that S&P downgrade. Then Monday morning, nobody knew what on earth was going to happen with the market. Thank goodness we were off on Tuesday with Women's Day because it was all happening all the time. But I don't know. I mean, some people are saying the bottom is in for the year. I've seen people, talking in blogs and on Twitter about that. In their opinion, that was the low of the year. Now's the time to get in. Everything's going to get fine from here. Others, of course, are concerned that none of the problems that we've been discussing are really resolved. They're just sort of knocking around, and we're getting used to them. I mean, in the context of the news flow, does it seem to you like nobody's really talking about the AAA, AA thing anymore?
Well, today, yes. No, now it's Nicolas Sarkozy, French president, and Angela Merkel, who's
the Merkozy meeting.
Yeah. Exactly, and that's the German-French summit, is what I call it. It's quite fascinating because the reason that what prompted this meeting is a possible downgrade of the AAA rating that France has.
Yes.
So this is now the concern. So is the coast clear? Because if we do see another downgrade, Paul, there's a possibility that we could see markets wreaking havoc once again, imploding, and then you're worried, and I'm wiping the sweat just before we get into Mad Markets.
No, I mean, of course, all of these things are possible. It's possible that, problems persist, don't get better. But, it's natural human tendency to kind of foresee problems, find ways around them, and then move on. So we know that the Europeans, what do we know about what's going on in Europe? We know many of these countries are in a bad way. What do we know also is that they're all very committed to the euro because they don't feel like unscrambling that egg. We know that there are rich countries that are not that keen on bailing out the weaker ones, but we know that the alternative, which is to let it all fall apart, is definitely not attractive. So my own assumption is that whatever difficulties arise, you can't use them as a tradable event either to sell or to defer buying because there's no point. At some point, this thing is going to get resolved, just as in America, they are going to deal with their budget surpluses.
How do you resolve economic data that is just consistently bad?
What do you mean by economic data that's just consistent?
I'm looking at my paper. I'm saying, okay, well, what about the manufacturing, the New York manufacturing numbers that were out today? Levels that we haven't seen since last year, the end of last year. We saw GDP numbers.
In your concern, point to a downturn in the US economy.
Yes, strong consumer sentiment once again plunging. We've still got unemployment, which is a very big issue. No amount of quantitative easing is going to pull the consumer out of the rut that it's in. And it's been proven through 2 sessions of quantitative easing.
Okay, I mean, the question really is all of that, which we know that the recovery has been tepid, we know that the consumer's not in a fabulous place, we know that there's been a lot of, nervousness and everybody watches the news and so the cycle comes quickly and fast. Do you want to be going to cash now because you perceive this to be the harbinger of more negativity to come? Maybe. I mean, for many people, that's an active decision they can make. Get out of stocks, go to cash. There's no point in getting into all sorts of fancy derivatives and other kind of downside hedges. Just go to cash. Cash is the cheapest and most effective form of hedge out there. But I'll give you this observation in return. I mean, what happens if the US resolves these issues? Sequentially, jobs start to come back. Corporate and retail consumer confidence starts to return because that's the pattern. We know that after recessions, it's much more likely that you recover than that you go further down.
So in other words, benign growth and yes, soft patches within the economy is something that we know is going to be there for a while until, of course, Fed Chairman Ben Bernanke says they're going to hike rates, which is 2013.
Yes, and we know the Fed will do what it'll do and the government will do what it will do, but we know also that companies tend to take crises and turn them into an advantage. They look at reductions in their cost base, and we know that S&P 500 quarterly earnings have been strong. So, there's one thing to talk about an economic debate and decide whether or not you think the US is going to rebound to be the most fabulous economic success story anywhere on the planet. It's another to decide whether you want to be long stocks in this environment
well, it's interesting. You're saying S&P 500 companies that release results doing very well, and a lot of the companies have really shown growth. But aren't those the companies that really have a presence in emerging markets? They've shot the lights out.
Yes, and to be fair, most of the companies that make up these big global stock indices like the Dow and the S&P 500 and the FTSE, these are by definition the world's largest companies, the ones that have multipolar operations that earn in emerging markets that are expanding their business models there. So yes, I mean, that's fine. you know, those are the stocks we want to own. You know, if you look at local portfolios, almost everybody you talk to owns Billiton, owns MTN, owns Richemont, owns Naspers, owns SAB Miller. Why? Because they're operating globally. Yeah. So, you know, you can follow the same principle in your investing decisions.
So is it my imagination or all these smartphone companies at war with each other? And
very strange
cannibalization which is occurring. So Google is buying or wants to acquire Motorola Mobility for $12.5 billion.
Yeah,
watch
so
out,
exactly
iPhone and
not
Apple.
Small money either. Well, let's just go back and unpack this thing a little bit, because Motorola was basically roadkill. I mean, they had their last successful phone was that Razr flip phone.
Yes.
That was very trendy, you know, it was in the movies and all that, and since then it just went dead. So the company basically died. Last year it split itself in two. The part that sells, you know, servers and network equipment went one way, and then the Motorola Motophone kind of thing went the other way. Battling, market share collapsing, going backwards. Dished their own operating systems, been using Google Android. So what is Google Android? It's an operating system for all of these phones, used by HTC, used by Samsung.
It's like a little mini computer, which you get, essentially.
It's basically the operating system. It's like Windows, but for mobile phones. Yeah. Now, out of the blue, Google wants to take, obviously they've got pots of cash because they have low costs and huge profits over the years. Now they're going to buy a hardware company. Very, very strange decision. And they are now effectively going to compete with some of their main customers. So if, you know, I don't know how Samsung and HTC must be. They must be mortified by this, because now it means Google's going to be working with a competitor of theirs. I don't know. I mean, I don't know who's going to work on the handset design. Maybe Motorola's got some fancy stuff in the back, you know, cupboard coming out. I think it's a very odd and not a very...
I'm glad you used the word fancy, because if you think about how much development we've seen in cell phones and smartphones and how much you can actually do, and there's just such huge competition. I'd really hate to be a developer or someone who actually needs to design
Android
products.
is a great product. I mean, it's got the same experience, you know, the App Store and the, you know, all the fancy wing-wangs on the handset. So I think it's fine. I think the question really is cell phone, the actual handset manufacturer, is a very commoditized and difficult business with tough margins.
Convergence. Everything in one product.
Well, that's where it's all going, obviously. So, I mean, I'm happy to see people get into that space, and we own Google in our international portfolios.
Okay, so end of winter selling is what we're hearing, but I don't know if it's the end of winter. It's been snowing in Johannesburg and hail.
But it's the end of dog days of summer in America, and we know that that's the only market that counts, because the global macro factors are so much more important in setting market trends. So it's the Americans coming back from their holidays that are going to drive our market higher. Put to work all the cash on the sidelines.
Absolutely. Okay, Paul, what are you looking out for this week? What is the big focal point for you?
I am going away on holiday for the rest of the week, so I'm not looking out for anything.
You're leaving us. That's great. Well, Paul, I hope that you remain optimistic while you're on holiday. Thank you very much for joining me.
See you next week.
Nice to see you.